right, thank you so much for rejoining us. Joining me via phone this morning is Mr. Adiola Imani, a financial and policy analyst. We'll be taking a look at the federal government reversal of the 15% import policy on fuel. Thank you so much, Mr. Adiola Imani, for joining us on business today.
Thank you very much. Good morning.
Good morning. Now, a few weeks back, the federal government came about, approved the 15% policy on fuel imports, and just about last week, the government suspended its proposed 15% ad valorem tariff on imported petrol and diesel, pending further review and stakeholder consultations. Now, this comes after intense public debate over the policy's likely broad impacts and timing. We have had arguments for and against this policy. Some have praised the reversal of the 15% import tariff, citing concerns about potential price hikes and the lack of sufficient local refining capacity. Others have equally criticized the reversal, arguing it undermines Nigeria's long term goal of local refining and is a setback for the downstream sector. Now, let's have your stand. Are you for or against this policy in the first instance?
Yeah, thank you very much. I think policy is rooted on something we see as budget. Have to stabilize local refining capacity through imports. And we have to encourage the local refiners so that we have more products. It is important we make such to avoid dumping, to avoid further sharp taxes.
Mm.
The fact that the federal government has regulated sector and we have a local refinery coming up and others are also coming up joining that. It is important for federal government to protect the local refinery of local content. It will be out of place if there's no such tariff on imported goods when we also have the budget. For those who have argued in for or against, they have their views too and they have their points. The fact that are we sure we can rely locally now on the produced petroleum products that we produce locally? Have we gotten to that stage of relying on what we produce or consume satisfaction? Are we not going to have a sort of scarcity in the process? And the federal government in its wisdom also already also come up with maybe the timing may not be right. Let's allow others. I think who are refinery is becoming upstream very soon. So let's allow others to join the things. I think looking at that, it is wise for federal government looking at the government. Players, but we cannot be because of that we will not have to post
Hello, Mr. Imani. You are barely audible. You are barely audible, and there's so much background noise where you are. You are not audible. Please go ahead. Yes. Yes, I can.
I say it's a welcome development for federal government to consider so.
Okay.
But it's a question of time, maybe before the end of second quarter of 2026, this has to come because the local refiners need that protection. If there is influx or those unabated importation of petroleum products, is there's no encourage the local refineries, there's no encourage exchange. It puts not feel it's a Dangote. Having a refinery, Dangote refinery in Nigeria has saved Nigeria a whole lot from a whole lot of embarrassment in terms of first capacity or having to transport the crude oil to another country and bring the refinery just increasingly and even less substandard products. But then we haven't one. If whoever wants to compete with everything, I believe the person should also slow down. Just like why it's coming up with this. Let all other that plan and all that come together. If they have to acquire oil in Nigeria refinery, whether one or Port Harcourt refinery, to come up with. If we have this one structure, I believe we should be able to be okay and place tariff in money importation and also avoid dumping. Because we are suffering a whole lot in this country when it comes to the rural project. Speaking of things, and when we are seeing who are being imported between the South and vehicles in Nigeria, you cannot open our doors and say we continue in that route. As long as we have an option in local requirements. So the shelter, the tariff, the relaxing it is just for looking at the trying interest. But then it's something I have to come as soon as possible before the end of the second quarter of 2026.
Now, the administration initially presented the tariff as a strategic measure to stimulate investment in local refining, reduce reliance on volatile world markets, and even save foreign exchange. Now, with the Dangote refinery and several modular refineries already in production, and another major $5 billion refinery potentially in development, there have been arguments that shielding domestic refiners from cheaper imports would foster competition, self-sufficiency, and job creation. Just as you mentioned, that most of these arguments are actually targeted against Dangote refinery. Now, however, how can the country strike a balance or maintain a balance between local production and import dependence for refined products, which remains essential, especially as Nigeria's energy import bill is still dominated by refined products and not the raw crude oil?
For any reason, the federal government also has the duty to limit the level of expectation, which is no economy import dependent largely can survive. If you resort to something, if you take everything, just better everything. And Nigeria has suffered in this time before in all sectors of the economy. So I believe in international trade respect imported goods. So then it cannot be a new, it cannot be what we depend on. It's the duty of every government. It's just like America has big as we are, even though it's protecting we have it, the president they had to genuinely invest in the airline, in the aviation industry because we were badly affected. They won't do that for other foreign airlines like outside the resort of Europe. So the government has a duty, whether as a result of staff waiver or sort of to protect local industry. So that has to be extended to Dangote or other local refinery of the country. And the best way to do that for the local refinery Dangote refinery is to place tariff on imported. We should not forget that out of these imported goods and because of the change of players we go through, at times we wonder why the input is cheaper than what we do here. And the cost of energy also we should not forget is quite higher. So when they do this cheaper like that, and we think we are having it cheaper, they still foreign exchange, and if we have it here locally, we can foreign exchange will do better. So no country relies more on importation and get its economy better. But of course, we must keep strike a balance in the sense that, and that's what the federal government has just done,
Mm.
to give a window for opportunities for the importers and also for the local refiners. Peradventure, we have not been able to produce the local consumption so that we won't have to shortage. Yeah, I think that was what the main window for putting on hold was meant for. So that if we want it, because the foreign importation will face tariffs, and those are politically cannot feed cannot produce to optimal consumption.
Mm.
So to find the balance that the government has to do, and if they have to reduce the tariff to some extent, not up to that 15% to make it manageable for the product, to still be able to compete, not cutting them off completely.
Mm.
They have to be common ground such that the importers is still be part of the economy while the local producers is to get their own fair share of the market.
Now, our government had extended the implementation timeline, that is, of the 15% import tariff. It has extended its implementation timeline till January 2026. Now, the cement sector is an example of how local production can thrive once monopolistic import structures are dismantled. However, is Nigeria capable to do that at this time in the oil industry?
We can Dangote has expanded 250 barrels per day. Now that has been expanded, I think, to almost 1,900 barrels per day.
Mm.
I think if that is followed, we will be doing, not before when there was subsidy, we couldn't even specifically lay claim to what our consumption, daily consumption was. At the time, some figures were projected to be over 60 million. But we now got to the refinery and with the subsidy removal, it's discovered that it's not even up to 40 million barrels per day.
Mm.
And it's going down because we have been serving other African countries, West African countries, through subsidy. We've been subsidizing other countries surrounding us. But now that the price has gone as high, if not higher than their own countries, the propensity to come to Nigeria to live well has started to. So we are back to higher. And I think that if by January, Boa refinery will be coming up stream, and the other refineries are coming up stream, we're able to do more than enough for daily consumption. And I think there was it last month or last 2 months, Dangote refinery was able to refine products from here to the United States of America. So Dangote is also attending to other countries, other parts of the world, in terms of meeting their supply for exports. So I think to a very large extent, we will be able to get the marginal point of local refining being able to take care of us. So if that does not mean the imported fuel can still not come in, because an open market. But with the tariff coming up next year, they have to weigh their costs whether to buy from Dangote if going to be a marketer out to destroy, or you can go and buy from any other store. So the choice will be given. By the time you pay tariff, you can still find your return on investment fine, and it will become business as it should be in the regulated market. But I think we cannot open that window to say they will not pay tariff, because economies all over the world, Trump came and even increased the tariff sanction on China, Canada, and the rest of the world. So we cannot open our doors and say we want to be nice because we are lacking. Everything can be done for our doors. So we still have to come to that place. January is not far away. So whatever needed to be put in order has to be put in order to set it out. And I think that by that, Nigeria will be better for it.
Now, trust in government is essential, and the tariff suspension has raised questions about the government's economic decision-making process. Let's not forget that the economy is still fragile. What sort of signal is a government sending to local and foreign investors by reversing and suspending this tariff for now?
I think for me, it's more positive than negative.
Mm,
If you make a policy and you get a feedback, every responsive government is ready to listen and feedback and sincere feedback on that. And if we're able to look at it that we need this building to have these skills to be alert on the tariff, therefore the market share, and government is able to listen. It shows confidence in the foreign investors, thinking that this is the government we can talk to. This is a system that will stand. And no stay in mind, first superior argument. If they come with your strong reasons and your argument seems superior to that of the government, there is no arrogance in that to listen to the voice of reason. So it is more positive than negative. It is a good signal for a foreign investor or to a foreign director, knowing that we can always talk to the government and they will respond if we bring our facts and we get our acts right. So, it's more of positive.
Okay, now before you go on the program, Mr. Imani, do you see the suspension of the import tax? Do you see it affecting the operational viability and growth prospects of emerging local refineries such as the Dangote Petroleum Refinery and other modular refineries in the country?
Of course, it will. And I know if there's any of subsidiary companies or Dangote that ever face competition, if a competition before now, it will be Dangote Refinery. I think they know what the stakes are. The stakes are getting higher every day, and that's why they have dropped their prices consistently. They try to play the game into the volatile markets.
Mm.
The general leadership in the volatile market, and they've been trying to also up their game. Having it in mind now that they will still be same tariff, imported goods from January, they also have to look into their books together with other military economies and how to compete safely, even in the midst of that tariff, to take advantage of it. And one of the ways to compete was the initiative of 4,000 trucks to deliver the petroleum products directly to retailers, which made it easier for retailers to patronize them. All you have to do is pay money without cost. This will take away the cost of transportation. This will take away risk on their part. So the business, the market will be of course tense, and because the importers also come out with their own. But it's good for Nigeria as a whole when we have this kind of competition. Because if there is no business to suffer from that, if there is, they can do their promo to know how to live like better people. Rather than transferring the cost of transporting the illegal oil from the refinery down to the retailer shelf. Now, if the cost is taken away, it will be taken off and having Nigeria in terms of the final cost of purchase, which makes it good for us. So, by and large, it's a win-win for Nigeria when we have this kind of competition. And let's know that there's no time to take side and to cry foul. In the market, is a way, the personal leadership market is a way of the world. And when one thinks that it's been an underdog, it's going back to the strategize. Everything you must balance in is the fact that Nigeria must win. That's the way of government.
All right, thank you so much, Mr. Adiola Imani, for joining us on Business Today and for airing your views on the reversal of the 15% tariff policy on fuel imports. Thank you so much for joining us on the show today.
Always a pleasure.
Do enjoy your day. Thank you so much. All right, moving on the program, taking a look at last week in review, the macroeconomic landscape last week was shaped by a steady increase in private sector activity across key industries. The deferment of the 15% import duty on refined fuel to the first quarter of 2026, market jitters over the anticipated revision of the capital gains tax (CGT), and the National Assembly's approval of a 1.15 trillion naira loan request. In the financial markets, the naira saw a slight depreciation in the official exchange window, and meanwhile, fixed income securities enjoyed a bullish run, pushing yields lower across short and medium term maturities. However, the equities market continued its decline for the third consecutive week, despite positive gains in the last three trading sessions. Looking ahead, the October inflation figures, open market operation, OMO maturities, and Treasury bill NTB auction are likely to influence fixed income yields, keeping them stable. Equities may maintain recent upbeat momentum driven by the announced CGT revision. And Nigerian banks have recorded a 3.3 billion naira loss to fraudulent activities during the first quarter of 2025, a 603% year-on-year increase from 468 million in the first quarter of 2024. This is according to September 2025 report by the Financial Institutions Training Center (FITC). In its methodologies, FITC received 33 fraud and forgery submissions from Nigerian banks between January and March 2025. The highest was in March, which accounted for the highest volume with 25 submissions. Amid this, the total cases reported increased by 7.7% to 12,347 in Q1 2025. Further breakdown shows that the most frequently reported incidents were tied to computer, web platforms, 7,361 cases, mobile transaction, 2,875 cases, and POS terminals, 1,559 cases, while computer web-based fraud emerged as the most financially significant category in Q1 2025. It also accounted for 10.6 billion naira of the total amount involved in reported cases. And lastly, Nigeria's crude oil imports from the United States more than doubled in the first 8 months of 2025, rising by 101% compared to the same period in 2024. Nigeria imported 31.69 million barrels of U.S. crude, up from 15.79 million barrels during the same period in 2024. Notably, there were no recorded U.S. crude imports in January of either year. Monthly volumes varied but generally increased sharply through mid-year. February imports were 3.11 million barrels, down 13.8% from the previous year. March rose 53.5% to 5.25 million barrels, while April increased 32.3% to 2.04 million barrels. Imports in May surged 82.4% to 3.79 million barrels, while the most significant jump occurred in June, soaring to 9.16 million barrels, a 782% increase over June 2024's 1.04 million barrels. Imports in July were slightly higher at 4.17 million barrels compared to 4.10 million the prior year. August reports showed 4.17 million barrels with no 2024 comparison available. And that's it on business today. Thank you so much for watching. Join us on Wednesday for another edition of the program. My name is Odunayo Sawyer. Good morning.